Good morning, Steve Reed in Chicago with the morning grain comments. Markets are higher overnight. I think each market has its own individual issue going on. The wheat market rallied sharply yesterday, and searching for headlines, I think the number one headline is that Russia is moving more troops to the Ukrainian border. U.S. Secretary of State is on his way to Ukraine, and the UK has shipped some support to the Ukraine. So even though we don't see any invasion today, any morning we could come in and see some type of action which would be very supportive to the wheat market. We also note down in South America, yesterday beans and meal were lower. Funds were selling the rain event in Argentina. It looks like most of Argentina, central Argentina, will see somewhere between 2 and 4 inches rain, especially in Cordoba and Buenos Aires. Now, Paraguay, western Mato Grosso do Sul, western Paraná, and most of Rio Grande do Sul will miss these rains, and the temperatures there are higher than normal. So the shift is away from Argentina to maybe southern Brazil as far as price action is concerned. After day 10, Argentina goes back into a drier pattern, but it's not as hot or as dry as prior to these rains. In the U.S., southern plains are dry, and I think that's going to continue. Our weather person still sees the chance that the dryness continues in the spring, and given La Nina and a negative PDO, we could actually see that bubble into some kind of dryness in the western Corn Belt. For the most part, the eastern Corn Belt is going to see timely rains, so this is going to be a phenomenon for the plains and the western Corn Belt to watch. Trading over $6 corn, I think, is partly demand related and suggests that export business should start improving. We've seen river situations, maybe even COVID issues delaying barges being loaded, and that is causing a firmness in the basis. We also note that the soybean oil market is higher with palm oil at new highs, and we've seen crude oil testing $86, and there was some reports out that stocks of crude oil globally are near 7-year lows. We also feel that some people think that the Omicron virus may not slow the economy, which is positive for oil demand. One group, IEA, increased their oil demand for 2022. As far as other price scenarios, 1384 to 1387 is probably resistance in the March beans, $400 meal. Soybean oil looks like it could go to 64 cents a pound. The fact they're over $6, March corn could test $6.17, and $8 is resistance in the Kansas City wheat. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.